After settling Wednesday to their lowest level since November, gold prices are experiencing a bit of a pop this Thursday. Jim Wyckoff joins us now. Jim, good to see you.
Hello, Daniela. Always nice to be with you.
So, Jim, why these little bumps for gold? Is it due to the dollar corrective pullback we're seeing?
Sure, Daniela. We've seen some strong selling pressure recently, mainly due to the stronger U.S. dollar index that hit a 12-year high overnight. However, as we speak, we've come off of our short covering bounce highs a little bit today. We are seeing a little bit of bargain hunting and, like I say, short covering in the futures market, but importantly, the technical posture for gold remains bearish. We are in a several-week-old downtrend on the daily bar chart, and the path of least resistance right now remains sideways to lower.
All right, let's look at this news item now. The Federal Reserve stress tests are finally over. They had begun in 2009. We saw 4 of the largest U.S. banks barely passing. Does that concern you, Jim? Is that a red flag?
Well, Danielle, it's not going to impact the marketplace. Those stress tests are not, unless we do see a failure, and we have not so far. We'll want to keep a close eye on that, but right now the focus of the precious metals is on the value of the U.S. dollar, and as long as the greenback remains strong, it's going to be hard for the gold market to make much upside headway. I suspect it's going to take some kind of a fresh geopolitical development to shake the gold market out of its bearish ways, and those types of events do occur.
Jim, looking at other economic data, we saw weaker than expected retail sales, which shows that Americans aren't spending as much as maybe we thought. So what does this really say about the state of the U.S. economy? Here we have this really strong U.S. dollar, but some of the data doesn't match.
Yeah, Danielle, and it's a case of, we've talked about this before, the U.S. dollar is kind of the prettiest ugly kid around. And, you know, there are elements working against the U.S. economy still, and like we saw in the retail sales data. But generally, as we saw with last week's jobs report, we're seeing some modest improvement in the economy, and I think that augurs in a good way for the dollar index overall.
All right, Jim, let's wrap now with your Wyckoff market rating for gold and silver.
Daniela, I'm giving April COMEX gold futures a Wyckoff market rating of 2.0. That's firmly in the bearish camp. As I said, we're in a solid price downtrend. We see overhead resistance at this week's high of 1174.40. Solid technical support at the December low of 1143.40. Looking at May COMEX silver futures, also getting a Wyckoff market rating of 2. Firm downtrend in place on the daily bar chart. Solid overhead resistance at $16. Solid technical support at $15.
Fantastic, Jim. And finally, we have the FOMC next week. Obviously, some big news we have to pay attention to.
Next week is very quickly going to turn to the FOMC meeting that takes place, and the developments coming in the aftermath of that meeting. So that's going to be, we could see markets kind of pause or in a quieter mode here early next week ahead of that FOMC meeting.
Thanks so much, Jim. We'll see you next week. And thanks for watching Technically Speaking with Jim Wyckoff. We'll see you tomorrow.